The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour, the Friday edition, Friday the 25th of July. Gosh, time's flying. And my pleasure to be here Monday through Friday on market days at 877-927-6648 with the Dow down 150 points, down 0.80%. But the S&P is only down 0.53 at 10.59. This is a fascinating market, and today, between the entire week, but especially the last 2 to 3 sessions, if I had to write a script, in fact, I had emails last night about this, but if I had to write a script as to what I would like to see for the market to actually have a breather, to really pull back and take some time out, to regenerate some energy, especially based on my weekly charts, I couldn't have written a better script than what we're looking at, and I'll talk about that in a moment. I first want to say, hey, great first hour. We've got the Global Market Pulse now at 8 o'clock Eastern Time with John Logan. Great show. And then we had, filling in for Steve Rhodes, we had Daryl Martin, and usually Daryl's doing the diagnostic trading hour at 1 o'clock, and then on a Friday he's joined by Tom, who's not here today, at 10 o'clock. So today he did the let's see, yeah, Daryl did the show. So we had John for 2 hours, we had Daryl for an hour, I come on for an hour. Straight after me, what do you have? You have Living a Primal Lifestyle, and that's just a great show. You've got programming right through the day until 6 o'clock, so stay tuned. TFNN out, your educational medium right here in the stock market. Technical analysis, and that's what we do, and that's what we do best. The ESU, the September futures, which I usually show first thing in the morning, I show my subscribers this, and I talk about it. In fact, let me just draw this. I'll make it a little bigger. This chart right here on the left, that's the daily chart. And what I said, I've got a leg E/A. There's a doji candle, 1985.75 is the high. Look at the MACD, the moving average convergence divergence. Now, you can learn all about that if you get my CD introducing the Chapman Wave methodology. I discussed it in great detail, how you can use the MACD, the stochastic, how the count works, etc. But most importantly, look at this. That fast-moving average, the green line is really the 9-period differential. I like to call it the fast-moving average because certainly in my work, it's the one that moves quicker than the red line. And so it's 12, 26, and 9 are the different specifications. And what's really important about this is that it is deflecting lower. Instead of crossing positive with the S&P at 1987 to 1989, it is down at 1971.25, down $9. And the 9-period moving average, let me just click on this and get it exact. 9-period moving average at 972, let's call it 972.50, is being challenged right here, with a very good chance by the end of the day, if this weakness persists and the volatility finally picks up energy, trading at 12.35 or 51 cents right now, goes towards the mid to higher 12s, that'll signal that finally, and I was talking about this all week, that the VIX has woken up and that the energy that we were looking at in the volatility index, let me move to that right now, just showing you first of all that the this chart that I showed my subscribers, I really drew it in and I said, we've got fighting technicals. You've got the arch pattern, which says that this is a peak E and a significant high double top at that 1985-75 level. And that here's a dashed line which says that longer term you could go out towards the 200-period moving average of 1967. Shorter term, there's a different one. And what happened is I drew another. I don't often do this, but there's a little a wedge formation, and that was showing support. It just took out that support this morning, then popped up, and then plop, hit the 9-period exponential moving average, that black line, and started to falter. And now what we're looking at is that instead of being just down 4 or 5 points in the E-minis, which the bulls would say, oh man, another buying opportunity, Amazon and all these stocks that got clobbered. This is a great time to buy. You've got to be really careful here. I want you to go to the VIX index, and then we'll go to all the numbers. VIX.X, that's how I get it on TradeStation, is up 51 cents at 12.35. 51 cents doesn't sound like all that much, but it happens to be 4.31%. But here's what I've been talking about and making a big deal of. Showed it to my subscribers. I said that support in the 200-period moving average, that big spike to peak D at 15.36 in the 120-minute chart, it keeps coming down. And as other indices are making new all-time highs, well, let's just say that the S&P was making an all-time high. So we're looking at a divergence here with strength being maintained in the volatility index. And lo and behold, you're seeing here, once again, a little bit of strength. Not enough. I'm not happy. I want to see it up in the 1370s to the 1430s so that it can challenge 15.38, the high that was made on the 17th. Was that a week ago? Yeah. And what's even more important about it is that 200-period moving average of 13.40 in the daily, I want to see that not just challenged, I want to see it become a support level. So for my subscribers, to my opening call, what I did was, we still have our longs. We still have that forward position, although maybe not. Yes, we do. Maybe not. I raised the stop. Let me just double check. Maybe it'll be taken out very soon for a nice profit, but not a great profit. But we've still got the Facebook trade, and Facebook's up 35 cents at 75.32. We went in at 60 in the 69s. So this is going to be this is that bifurcated market that is finding fewer and fewer buyers. That's my belief. Now let me go through the scenario. No, let me just do this. The composite index is down 31 at 4.40. The S&P is down 10 now at 1977. The Dow's down 150 at 60,935. You've got gold just up a little bit. The GLD's up 58 cents at 124.94. Gold itself is up 5 at 12.96. Silver is up a little bit, 12 cents at 20.54. It's bonds. Bonds are up 20, 30 seconds. Look at the TLT, a gap. Beautiful island reversal, trying to challenge the 1163 double top peak C1, C2. To my eye, I think we're going above 115.63. And that would start to improve the weekly chart, and the monthly chart has broken out. I must tell you, this is something very interesting. Speaking to my bank manager yesterday, no, it was the mortgage the guy at the bank, and he was saying, Mr. Chapman, it looks to me like the Fed's talking, and by October, you should start to see the interest rates moving up sharply. And I'm saying to myself, I just don't know if you can make predictions like that these days. If the Fed is there doing the buying, every time the bonds pull back, push, they go, the Fed. Every time the dollar pops up, bang, 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 they used to do. Now we're seeing something very different. Just up until the other day, you tell me how many times any of you have seen the dollar rally, bonds rally, and the S&P rally together. Come on, tell me it happens just for a momentary period. And all I can say is, my question is then, are bonds signaling slower growth, weaker GDP? I think it's about this time that I would anticipate that suddenly we're going to get some news about the slowing economy. I'm not an economist. I'm just going on my many, many decades of experience of listening to what's being said by economists. And when everyone's saying, okay, we're out of the woods, wow, that's when the woods loom. So I'm a little cautious here about everything. As I said, dollar is up sharply, euro is down. Now, I'd like to do something very quickly before we start to take calls at 877-927-6648. And that is, I want you to look at the RTH. This is the Market Vectors Retail ETF. And I'm looking at this, and I mentioned to my subscribers in quite a lengthy overview that I do every day. Maybe I'll get it out in a moment and I'll show it to you. And I mentioned that the retail index didn't just fall out of bed. In fact, it's gone sideways in a rectangle formation. It was only some 30 cents from the all-time high. The 61.36 was the most recent high. And it was in the 61s just, I think, yesterday. 61.36. And that is extraordinary that it's held up so well after an incredible move to the upside. I'm looking at this and I'm saying, rectangle formation, and the moment I see it, I just grab the tool, and it says right there, a rectangle formation. If and when, and it will at some point, I don't know when, it breaks 55.12, the low of February of last year, that'll signal that the whole retail sector's having a problem. Now, here's the rectangle formation in the weekly. It kind of snuck out, but it hasn't broken above this trend line. Let me put the trend line all the way back there. Look, it just hasn't. I love when you can use trend lines. In my CD, let me just double check here. CD, edit, view, read, show. No, show, hide, find. Find trend lines. Trend lines. Let's see what happens. No trend lines. Okay, trend lines. Next. Okay, indicated trend lines. No trend lines. Talk about there, trend lines. You see, you can just take two lines, and if you draw them in a specific way, you can get an incredible amount of information out of it. Look at this Dow chart from 2003, showing the decline from way back in 2004, how every time the Dow went to this level, it got repelled. Every time it went down to this support level, it got propelled. And when you look at it, trend lines, I should have continued. Trend lines. See what they've got here. I don't have too many trend lines. Okay. All right, trend lines. So once again, here's the pattern I call the falling axe or the declining cone. Just 3 trend lines can tell you an incredible amount and give you guidance. So in this particular instance, we've got the guidance that says, so far, the RTH, the retail ETF at 59.73, down 95 cents, making a fantastic island reversal. Now, that's unusual. You get it in overseas stocks when they're trading already when the market opens. But no one look at this. Unbelievable. Yesterday it was at 60.77. Closes at 60.68. It gaps down. Today's high is 59.91. That's a huge gap. So watch this, because if the retail index goes under 58.50 in the next couple of days, I'd say that's a problem. And then go, that is a problem. I'll be right back, folks. Stay tuned.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. My pleasure to be here. This is the Friday edition and of the Tiger Technicians Hour. Don't forget, my service is the opening call, and because I have all these different screens around you, you'll see me swinging my head all over the show. I don't want to miss anything. I don't want to miss any emails, question about the IYT. I'll get to that. So this is what I was thinking. That and the answer that I gave to a questioner last night to an analysis that they gave based on volume and a number of other studies that had been done, which his suggestion was that we were making some kind of a top, and I concurred. And here is what I'm looking at. So if I had a question that didn't about the euro. So the euro, US dollar is right now touching the 200-period exponential moving average in the weekly chart. Look how important. Look at the arch formation. Look at that rogue wave. This is, is there enough time in the day? This is Technical Friday. I'm just going to go to it. You see the spike in the euro on the 9th? Well, there's a technique that I use that's called the rogue wave. And the rogue wave is chapter 11A, slide 268. So let's find it here, 268, 11A. Can I find it? 1011. Okay. So right here is what we're looking at, 11A, 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 11A. Wait. What happened to 11A? There it is. The rogue wave. This chart pattern usually occurs after a sell mode appears to be in progress. Having shown up in the previous BBH, that's the biotech chart that I had over here, it is unusual to come as a peak D, but the essence of the rogue wave is surprise. The rogue wave essentially rallies without the structural support of the technicals, a final up spike that unfolds after it appeared that a sell mode was comfortably in place. And I'm going to explain, I'll show you the chart. And I just want to give the analogy because I love this analogy. Rogue wave analogy. This is slide 269 of 476 slides. The sign at the beach says, high tide at noon. At 12:08, you're sitting at the water's edge reading a book and relaxing when, splash! Suddenly you're soaked and wondering what happened. Well, the tide might have turned, but that wave didn't read the sign. And that's exactly what we're looking at here. See, this is a chart of Triple M. It goes to peak F in the Chapman wave. You see the technicals in the book I circle, I show, I explain very clear. There's great clarity in terms of what we're looking at. And then it pulls back, and then suddenly there's this up spike that momentarily, usually it's the bar that breaks the previous high or recovery high or all-time high, and all the bears say, oh no, not again, and they cover their shorts, and it hangs there just long enough for the bulls to say, oh geez, I finally got out and I'm wrong, and I got to get back in. They get back in. Moments later, the bar that takes you out is the bar that collapses and goes merrily on its way to the downside. Very often, you've usurped downside energy, so you will still keep going down, but you go down for maybe 5 to 10 bars, and then you have a big spike to the upside. So let's go back to what we're looking at here. The euro does exactly that, gives you a peak E. You see the technicals right there, the EUR-USD on the 14th of March. 1.396 is the high, and then pulls back. It looks like a bear phase has started. The MACD's down, the stochastic's failing, makes the H pattern, and then suddenly there's this one move that takes you above the previous high, hangs there long enough just to squeeze the shorts, hangs there long enough for the bulls to say, oh, every other time it's gone to a new high, it's gone even higher, I've got to get back in. And then just moments later, it plops and it goes down to previously to where it was, and even lower. That's exactly what happens on that bar, and then continues on its merry way as if nothing had happened. The rogue wave splashed you. You're drying yourself off, looking to see what happened. The wave's already gone out, and you say, where did that come from? And now it's sitting on a very important support at the 200-period moving average. 120-minute chart is trying to find support. We'll see if it finds support by the end of the day. So this is a weekly chart. So I want you to go to that, and then I want you to do this. And what I had said was to Doug, I said, this is what I'm concerned about, that you had this rotation through powerful stocks like a CMG recently, or like a, yesterday it was, Facebook, which we long, and, but you had others like Xilinx. You had others that just tanked on their news, Amazon. And that created this feeling that the market was still going higher, but these individual stocks might go up, but they might go down. And then all of a sudden, today, you got the Dow down sharply, and the S&P just hangs there, and the bulls are saying, oh, isn't this fantastic? We've got strength. And now you're seeing that that strength was misled strength. It's managed to fool everyone long enough to get the Dow down under 17,000. This is a critical phase. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks, we're back. Dow's trying to come back a little bit. It's down 134. S&P's down 10. Now, it's very interesting. I've seen this happen often. No, I've seen this happen not that often, but often enough to have an impression in my mind that says, be a little careful here because the S&P is starting to catch up. Now it's only down 0.54%, and the S&P is down 0.70. The Dow's down 0.70. S&P is down 0.53. Kind of a little catch up there. So we're going to be watching this closely. Most importantly, the 200 period of the Dow at, let me press this little button here, at 16,955 was pierced. We went down to 16,915. Now, this is the bar in the cup formation that says, hey, you got to try to come back a little bit and retest that major artery, which is in this case that 200 period moving average. Now, as someone in the dentist said, eerie with all these peak E's and F's coming in, leg E's and F's in the weekly chart. Let me show you something. The Dow daily at 17,151 has made a peak D, and now it's got a kind of a 1-to-1. This is that measured move of a 1-to-1. In this case, it would be actually we've already just done almost the 1-to-1. Maybe just a tad, maybe another 15 points lower would be an exact 1-to-1. But the up channel, the up channel that I've drawn right there, that blue line, we're close. We've pierced it. And we don't know where it'll close today, but it's real close to actually closing below. And closing below will be underneath 16,976. That's and we're 30 points below that right now. But that's not the issue. The issue was And I'll keep these 4 time frames up just for a moment, but I'm going to put them a little aside here so that we're looking at, there we go. We're looking at a shorter term. No, I'm going to take the 120 minute away. We've already done that. We did that yesterday. I showed you all those peak Ds that were unfolding. Look at the weekly chart, and this is what I wrote to my friend. I said, look at the speed with which we've gone peak D, peak E, peak F every other week. In fact, that is so unusual in weekly charts. It speaks of churning. That's as far as I'm concerned. But it's no use me talking about things. We want price points because this is a technical analysis process. So in the analytical aspect, what you need to see is that the 200-period moving average, sorry, the 9-period moving average right there at, I'm not hitting it, at 10,890, that's the weekly. That's the level to watch. So if we close decisively under 16,900s in the next, not this week, could be this week, but if it's next Friday, that says there has been a reversal at a potential peak F rather than a peak C. And that says if the MACD turns negative and the stochastic, which is amazing at 90%, starts to pull back towards the 86% area, yes, we might have a lot of support, but most importantly, you've got to go one step at a time. And if the daily, which is the rudder, starts to go, right now, if it closed here, it would be into a buy signal confirmed with a buy mode because the MACD is turned negative. Stochastic's under 80%, and the price is closing way above the 9-period moving average and way below a channel line support level. And it's from a peak D. And you've got the pattern that I talk about. It's really an inside H. It's just, when you see these patterns, just study them and try to focus on them because that arch at peak A minus, peak A or minus, or B minus, in this case it's A minus, is very negative because if it closes down below the left side low bar of 16,966 from the 17th of July, that's saying you've got one bar, maybe two, but one bar to try to get back into the arch formation above that level, just to say, hi, everybody. I didn't have a chance to say goodbye. I ran out so quickly. Goodbye, and now I'm going back down. Or to say, whew, that was horrible down there. I want to come back up and be with you guys. I'm going to try to close above 17,037, the 9-period moving average. Everything about this says we are making a top in the Dow that is probably going to impact the weekly charts. The monthly charts, we're going to have to wait all of July to see if we don't go to new all-time highs before we can say the monthly charts have made a peak E, in this case for the Dow. Now look at the S&P, SPX.X. I don't want to sound like a major bear all of a sudden. I'm just talking about a rotation that says be real careful. There's some sectors that they're just done. And you've got to be real careful because they're going to be coming down very sharply. And there are other sectors, very few now, but fewer and fewer, but there are enough that are holding quite nicely. And for my subscribers, we've tried to identify them. We try to hold them. We just missed getting into a stock that had a superb day yesterday, and even today's holding very well. It tells me this is probably an area that we can start nibbling on. We might even overpay a little bit, have another position lower down for a break to the downside. The S&P is possibly today going to make a peak F with a doji high in the weekly chart. It is leg D in the monthly chart. Let's forget the monthlies because the monthlies will only interact with the daily and the weekly because they're the much longer term, so you have to wait. But at this particular point, if there's no new high above 1991.31, let me type that in. No, I love that. Look at that. That's a mirror image. 1991.39. Next week, you've made a peak F. If you close, not you, if the S&P closes below 1955, that's the 9-period exponential moving average next week, not only will the stochastic go from 93 to about 87 or 86, but the MACD will dip the fast moving average, the 9-period moving average differential, and then we will see whether or not it crosses negative. This just might turn into a very big oval pattern or a rectangle pattern. and usurp time rather than price. But I wanted to be on the negative side, especially on the sentiment indicators, because I think this is the time that they wake up and they have better moves than some of the indexes, even the 300% indexes. So S&P break under 1955 by a week from today at 4 o'clock. That'll be negative. In the meantime, the daily hasn't even given a sell signal. I have to wait for the close to see if it closes under 1978. And then if the MACD closes down, which it is, deflecting lower, and then if the stochastic goes under 80%. So until then, I might anticipate. Now, I did put a peak D. Okay, this is Technical Friday, if you don't mind. I'm going into this a little bit. I had to put a down arrow at 1985.59 in the S&P back on the July the 3rd. Why? Because it pulled back from 1985 to 1952, and that 1952 was accompanied by a negative MACD and a negative stochastic and a close below the 9-period moving average. I had no choice. So that means that this E gets an inverted, if there's going to be, this is the daily chart, if there's going to be some kind of a signal, I'll put an inverted V, because that's the next sell signal sign. I like that, the next sell signal sign. And you've got a little doji candle. That, I did a whole workshop on dojis as well as the silent doji in the Chapman wave methodology. This doji at the all-time high is very significant. It becomes less significant if there's 1 penny above 1991.40. All of a sudden it loses its significance. But as long as it's up here with a little gap down today, says Monday should also be a negative session, and then there might be a rebound. But Tuesday, Wednesday is going to be really important to see if there's follow through to the downside. So that's the stochastic, and the 100. Sorry, that's the S&P, and the MACD says, yeah, you can see a little bit of a bounce, but the technicals are still very weak. Now let's go to the IWM, which is already in sell mode. It's 120.97 was the peak, double top peak E. The peak E top that was matched all the way back from, wow. All the way back from 120.58 back in 2000, and I don't even remember what year it was. 2014, that was last year. And the daily chart, and it goes down to 107, pops up to 120.59, and in the exact left side, right side price time match, as well as the inside, this Chapman wave inside wedge. This is another technique in my CD that's I consider to be a very important projection tool. So what does it do? It projects, and it goes, the price goes exactly to the day, but one day before in 60, so March to July. March, April, May, June, July. So let's say in 48, 50-something sessions, it misses by a day. Not bad. And then what does it do? It comes all the way back, makes an H pattern. Remember the lowercase dreaded H, the H pattern? If the IWM, the Russell 2000 ETF, iShares, takes out 111.95, that's the 200-period moving average, and then takes out 112.20, the low of the 17th of July, there's really not much room here until it goes down, until it goes quite a bit lower, until it goes down to the 111s. So I'm watching this really closely. I got a lot of respect for charts that obey the methodology that that was created over the years. And look, there's that cup formation. That's what in the Chapman wave CD book introducing the Chapman wave methodology. That's the pattern I used to call the drop bucket pattern. It's really a double top. What it is, you've got the handle on the upside going to 120.58 in the IWM, and then it makes a cup formation, just like the backhoe. A backhoe picks up all the grit, lifts it up, and then dumps it into the truck. When you break halfway between the cup and the lip, that's 107 to 120, and close below that, there's a real good chance you're going to test the low. I'm kind of cautious. Why? Because this is a weekly chart, and it's made a peak E, as far as I can tell. I can't call this A if it closes anywhere here. I'm going to have to put an inverted a caret, and that's going to say, whoa, be careful. Terry says, and then my Gartley cell worked on IWM. Wonderful. And what is this in the monthly chart? This is why I'm going to get very nervous about this. If this is really a peak F top in the monthly chart, there's time and price. We're looking at weeks to 3 months of a correction at least. I don't want to go there. I just want to go one step at a time. So that's the weekly chart of the IWM. Look at the NYA. I mean, I could just do this all day. The NYA, peak D, holding not bad. Yes, down 50, down 0.45%, holding the 9-period moving average of 10,915. It's down 50 at 10,987. And the MACD is turning down, the stochastics turning down sharply. Both are still in solid territory, but it's that monthly that made the left side, right side price time match, missed it actually by quite a few months. Oh, no, it got it to that level right there. I don't have one. I have this rising inverted wedge going to an apex right there. This is the month exactly. And there's the doji candle exactly. We've got a week to go. Let's see where this closes out. So I don't want to talk about it just yet. I don't say the MACD and stochastic are very good. I don't want to talk about the monthly until I get signals from the daily. And the daily right now says it is in a sell signal, did go to a sell mode, had a good rebound. And this candle here is going to be really important because if it creates the H formation, then the NYA, the New York Stock Exchange, if it goes down below 10,950, that's the moving average. I think that's a 50. No, it's a 32-period moving average in the daily. That's going to be very negative and say good chance of testing the bottom. So that's that. Now, the question I had, email was IYT. The IYT has just been on a tear. It's just been an amazing chart. Look at this. The monthly has just gone up steadily, has barely had corrections. It went way past the 1-to-1 Chapman wave extension, and it's gone past the 133-ish level where that came in. It went to 152.40. 152.40, that is something. 152.40, I'm just typing it in. And it made a leg E and possibly a peak E today, if it closes down like it's doing. The MACD is good. Stochastics at 87, also good. But it's the weekly chart that's making a leg F, and that's making me real nervous because my unbalanced volume in most of these instances is saying that it is extremely overbought, and very often it is a heads up to what can go on. And 147.19 is the key. It hasn't done anything yet in the weekly or the daily or the monthly. It's the daily that's just turning around. If the IYT, the iShares Dow Jones Transportation Average Fund, takes out, instead of making an all-time high above 152.40, next week it takes out 149.73 is a moving average support. No, let me make it real easy. This is a beautiful long-term up channel. There is no sign yet that is giving anything other than a sell signal in the 120-minute chart that could become a sell mode if it closes under 150.76 today. But if it starts to deteriorate, and the MACD and stochastic, which are very good, but way below they were when it was making its June highs at 148.18 back on the 9th of June. If this starts to pull back very sharply now and takes out that little candle low, the candle of the 21st of July, 149.70, I'm not going there. I'm just saying 147.50 is going to be key for the IYT. That's a lot of points to go. Down 4. It'll have to go down there. I'll be back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Folks, stay tuned. Fabulous show with Nico and Paige, and great shows all the way through the rest of the day. Now, I just want to grab this one I'm thinking about. I was talking about the NQU14. This is the E-mini NASDAQ 100 S&P 200 2014 futures contract. And I said how terrific it was that with the alternate wave count, it gave you a heads up, and then just a nominal peak that culminated. This is real confluence. When you get an alternate count E/C, makes a brand new high, and that becomes F/D. You're looking for an F to become cautious. You're looking for a D to say, whoa, be careful, heads up. What happens? The NQ goes to 3991.25, breaks under the 9-period moving average. That's become resistance and pulls back very sharply from that level to a low today so far of 3937. Nice. So the work there in the 300. Now, what I wanted to say is that I'm going to recap what I'm looking at. But just for the moment, I had an email about Verizon Inc. I think this is to do with the format for emails way back when they started off. So I think that that's their licenses or something like that. Anyway, it's trading at 55.92, up 12.22%. Must have had good news or something, but it's spiraling up with a gap. And the question is, what now? And this is a great question. The question was, if I can find it. Basil, good morning. Please, could you look at Verizon? I was looking around earnings yesterday afternoon before the close and bought some August 55 calls for 10 cents as a lotto player into earnings. What do you think of this chart? Oh man, that is unbelievable. What a beautiful, definitely, right as we're speaking, regardless of whatever time frame you're looking in, take something off. How often in life do you get this kind of a super, it's trading at 55.95. Not only are you almost $1 in the money in your calls, but $1 just from being above 55, but you've got that huge expansion from the it closed yesterday at 49.82 from the 50 level. Take a good chunk of your profits. Oh, yeah, this is what did you do? You bought August calls. August. I would do this. I would take off at least half because it's just an absolute bonus. This is going to go higher. So I would keep kind of what I call a core. Let me put it this way. With this kind of move, I'd keep a core of a third of my position. I would take a third off as we're speaking, and then I would wait for leg D in the daily chart to take off some of the other, and then over a period of a couple of weeks, I wouldn't be surprised if it goes from 50s to the 50s, mid-50s to just about 57.5, 58-ish area. If it starts to pull back towards 53, somewhere between 53.30 and 52.30, I'm not sure it's going to take out the low here, but that's kind of where I would look to put some back. I hope that helps you, but it's congratulations. That's an amazing move. Okay, let's go through what I'm looking at here. So we went through all these different indices. I know that there are a whole bunch that I wrote down that I didn't do. So the IYT, monthly chart, weekly charts, that's really what I'm nervous about. If next week the IYT makes a lower high and for whatever reason does get down to the 148, 147 level, I have to be thinking that not as a B, but as a peak F top. And that's saying, just be careful. That's what we look for in the Chapman wave. Look at the home builders. HDX had a spectacular move the other day, going from the 197s up to the 203 area. Bam! Yesterday it comes back down. Today it's under the 9-period moving average. Not good. Also a peak F in the monthly. Okay, make it real easy. Stay tuned for Nico and Paige. Let me just run this as we go out. At the end of the day today on the weekly chart, if the VIX index is anywhere close to 12.50s, that's not a good sign for Monday. Folks, have a wonderful weekend. I'll see you back on Monday. Hey, check out my opening call. Get it 2 weeks free. Go to the front page of TFNN.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.